Hi traders, you're welcome back to the Forex Geek channel. If you've ever felt overwhelmed by complicated indicators and strategies, do not worry, okay? You are not alone. In this video, I'm going to be breaking down how to use simple patterns to trade, and this video is going to help you to read the market with confidence. All right, these patterns have been used by traders for years to spot potential market movements, and the best part, they are easy to learn and apply. Trust me. Whether you trade forex, stocks, or crypto, understanding price action is a game changer. Okay, now before we dive in, make sure to hit that like button and subscribe to the channel. I drop powerful trading content every day and you don't want to miss it. All right, let us get into it. So why focus on simple patterns? The truth is the market moves in predictable ways, right? And these patterns are formed by real traders' actions. That is, buyers and sellers reacting to price levels instead of relying on dozens of indicators. So learning price action and chart patterns allows you to react faster and smarter. And there are three major types of trading patterns that we're going to be covering today. And they are trend line patterns, which helps you to follow the market direction. Breakout patterns, which helps you to catch strong moves before they happen. And reversal patterns, which helps you to identify when the market is about to change. Now, as for trend lines, the trend is your friend. Okay, it's a very common saying. However, the trend is your friend until it ends, right? Now, understanding how to trade with the trend lines is one of the easiest ways to stay on the right side of the market. A trend line is simply a line connecting multiple price points, as you can see, to show the general direction of the market. Okay, so your trend lines usually are 7 hours and 8 to identify the general direction of the market by connecting multiple highs or multiple lows. Now, for an uptrend, if the market is making higher highs and higher lows, you draw a support trend line below the lows. When price touches this line and bounces up, it's a sign that buyers are in control. Then for a downtrend, if the market is making lower highs and lower lows, you draw a resistance trend line above the highs. When price touches this line and drops, it means that sellers are still in control. Now, for a tip, when a trend line breaks, like what we see happen here, it often signals a trend reversal, okay, or a breakout, which brings us to the next pattern. Now, breakout patterns are powerful signals that indicate the market is about to make a big move, right? This happen when price breaks out of a range or a trend line or key level with strong momentum. For example, let's just look at a triangle breakout. Okay, let's look at a triangle breakout because that is quite a nice example to use. So now, as for the triangle breakout, a triangle pattern forms when price consolidates, making lower highs. You can see lower highs and higher lows. All right, now when price finally breaks above or below the triangle, it often leads to a strong move in that direction. You can see what happened here and then here again. So whenever the break happens, it usually leads to a strong move in that direction. Now, how do you trade it? You wait for price to break out, then you enter on the retest. For example, in this scenario, we can see that after the initial breakout, you can see that there was a little retest before this spike downward happened, although it was kind of a false breakout because we eventually had the price get back inside. Then after this breakout happened here, you can see that there was some retest before we now had this spike, this gap that even happened, showing significant bullish momentum. Now it's important to pay attention to false breakout, okay? In as much as you ought to enter, after the retest of the breakout, take note that false breakouts can happen, okay? So always wait for a strong candle close before jumping in. Now, as for reversal patterns, they signal that the current trend may be ending, all right? Giving you an early warning to exit or enter in the opposite direction. Two of the most common reversal patterns are double tops and double bottoms. Okay, so we're going to be looking at a double top pattern and a double bottom pattern. All right, now we can see that we had a double top pattern here. You can see this first top and this second top. It forms at the end of an uptrend. You can see that this was an uptrend, right? So a double top pattern usually forms at the end of an uptrend when price fails to break a previous high twice, signaling a downtrend might start. Okay, and you can see that we actually had a downtrend after the double top pattern. Then on the other hand, we have the double bottom pattern. Right? The double bottom pattern is just the reverse, right? It forms at the end of a downtrend, and it happens when price fails to break a previous low twice, right? Signaling a potential reversal to the upside. Then we also have head and shoulders pattern, right? Head and shoulders pattern is actually one of the strongest reversal patterns, right? One of the strongest reversal signals, right? It forms when price makes a high, pulls back, makes a higher high, and then fails to make a new high. Okay? It forms when price makes a high, pulls back, makes a higher high, and then fails to make a new high. Let's just see if we can find an example of head and shoulders pattern. Okay, although this is not like a very perfect example, but we have a similarity here. We actually have a similarity here, though this is not a perfect example, but for the sake of time, some of these patterns you might not just easily find them at every given point or at any given point in time. But let's just explain what head and shoulders pattern is. I said it is when price forms a high, and then it pulls back, and then it forms a higher high. You can see that this high is higher than this previous high, and then it pulls back again, and then the new high that it formed is now lower than the previous high that it formed. So when that happens, this is now called the head, and these two are called the shoulders. Then this is called the neckline. This is the neckline. All right, this is the neckline. These two are the shoulders, and this is the head. Okay, so when price breaks the neckline, it's a strong signal that the market is shifting direction, and that was what happened here. After this neckline was broken, we can see that we had a reversal to the downside. So for additional confirmation, you can look for volume changes, volume spikes, because strong reversals are usually accompanied by increased volume when price breaks key levels. Okay, so that is it, traders. Now you know how to trade using simple patterns to spot trends, breakouts, reversals, breakouts and reversals with confidence. So ensure that you use trend lines to stay with the market direction. Watch out for breakout patterns to catch explosive moves early, and also recognize reversal patterns to avoid getting trapped in bad trades. All right, now comment below Which pattern do you use the most? Okay, let me know and I'll cover more strategies in future videos. If you found this video helpful, hit that like button, subscribe to the channel, and turn on notifications so you never miss a trading lesson. Keep learning, keep trading, and I'll see you in the next video.